To choose the right life insurance company, first consider why you are buying life insurance, what sorts of policies and riders will best help you meet those goals, and which companies offer those products. Policies. Not all companies offer all types of insurance. For example, Haven Life and Bestow offer term life insurance policies but don't offer permanent policies such as whole or universal life. Conversely, companies like Nationwide, Mass Mutual, and Prudential offer all three of those product types as well as policies that don't require a medical exam. Coverage. Think about how much life insurance coverage you need. This can help narrow your search. Companies with high minimum coverage amounts could have you paying for more coverage than you need. For example, if you are young with limited or no debt and no dependents, then a policy from a company with a minimum coverage amount of $750,000 might not make much sense. But, if you have a mortgage, a partner who doesn't work, and/or several dependents who want to go to college, a policy that maxes out at $50,000 might not provide ample financial security. Riders. Life insurance riders are typically add-ons that help customize a standard policy to better meet your needs. Here is a short list of some typical riders and what they do. Accelerated death benefit, a rider that allows you to access the money in your death benefit before you die, typically in the case of a terminal illness. Term conversion rider, this lets you convert your term type policy to a permanent type of life insurance. Accidental death and dismemberment, pays a set amount of money for accidental death in addition to the regular death benefit. Waiver of premium rider, if you become disabled, this rider lets you waive the premiums for your policy. Financial strength, another thing to consider is whether the company will be able to pay the death benefit to your beneficiary when you die. One way to assess that is by looking at the company's financial rating. A number of rating agencies, such as AM Best, provide a credit rating score. A credit rating is an indication from the rating agency of whether a company is likely to default on its debts. The less likely a company is to default on its debts, the better its credit rating. All the companies in our rating have a credit rating of A or better from AM Best. A high credit rating can indicate that a company is financially strong and will likely be around to pay the death benefit to your beneficiary when you die. What is life insurance? Life insurance is a type of insurance that provides money to your chosen beneficiary when you die. You choose a life insurance company that offers a type of policy and death benefits that you want, apply, and if you are accepted, the insurance company promises to provide the specified amount of money to your beneficiary. This can be a relative, loved one, or even an organization, when you die, as long as you paid the required premiums. This money is often used to cover burial expenses and replace lost income. For example, if the primary wage earner in a family dies, the money would help the remaining family members pay their bills. Types of life insurance policies. There are generally two types of life insurance, permanent and term life. Examples of permanent life insurance policies are universal and whole life. Read on for information on the various types. What is term life insurance? Term life insurance is a kind of temporary life insurance. A term life insurance policy is defined by how long it remains active, or its term. A term can generally be as short as a year or may last 30 years. Term policies may also provide the option of being converted to a permanent life insurance policy or renewed for another term. What is permanent life insurance? A permanent life insurance policy is designed to be a life insurance policy for the long haul. These policies generally contain two parts, the death benefit and the cash value. The cash value can work as a kind of savings component or type of investment, depending on the exact policy. Examples of permanent life insurance include whole and universal life policies. What is whole life insurance? A whole life policy is a type of permanent life insurance that contains both a death benefit and cash value. The cash value can grow if the company you buy insurance from pays dividends into it. Mutual life insurance policies and some policies sold by stock insurers frequently contain dividend options. Dividends can be based on things like the financial performance of the company. What is universal life insurance? Universal life insurance is another example of permanent life insurance. One of the key differences between whole and universal life insurance is in the policy's flexibility. With many universal policies, you can adjust your premiums and the death benefit while the policy is active. There are also several different types of universal life policies, including indexed universal life, IUL, variable universal life, VUL, and guaranteed universal life insurance. What is no-exam life insurance? A no-exam life insurance policy is a type of policy that doesn't require you to take a medical exam when applying. These policies can be either term or permanent policies. The approval process for these types of policies is often brief because you don't have to schedule and undergo a medical exam as part of the application process. While companies may waive the medical exam for some applicants, a no-exam policy won't require anyone to take a medical exam. How much does a life insurance policy cost? The cost of a life insurance policy can vary widely, even among policies for people in the same demographic. Some of the factors that go into determining the cost of premiums for a life insurance policy include the life insurer, age, sex, health, and policy add-ons, also called riders. If you just look at a person's sex, the difference in cost for a 35-year-old female and male in the standard risk class with a $1 million 20-year term life policy from Banner Life is just over $15 per month. If you take those same two people and type of policy and apply it to New York Life, the difference is almost $50 per month. Age is another important factor. The difference between a 35-year-old female in the standard risk class and the same female in risk class at 65 years old with a $1 million 20-year term policy from Haven Life is almost $975 per month. Individuals in high-risk groups, such as those who use tobacco products, will often have higher premiums. Do I need life insurance? Whether or not you need life insurance is a highly personal decision. Here are a few circumstances that may make a life insurance policy worth considering. Your partner or children depend on your income. Many people open a policy to make sure their loved ones maintain financial stability. Death benefits can be used to cover everyday expenses that may become challenging if they lose your income. This includes mortgage or rent, utility bills, food and groceries, tuition, etc. You have outstanding debts. Car loans, mortgages, credit card bills, and other types of debt can leave your dependents with an additional financial burden. A life insurance policy can pay down those debts and offer relief to your beneficiary. You want to cover end-of-life expenses. According to LIMRA, 83% of consumers point to burial costs as a reason for purchasing life insurance. That's no surprise given current and predicted funeral expenses. A 2021 National Funeral Direct Association, NFDA, study indicates that the average cost of a funeral, including a viewing and burial, is $7,848. Adding a burial vault can raise that to nearly $9,500. Those costs are likely to rise. The U.S. Bureau of Labor and Statistics data shows a 227.1% increase in funeral costs between 1987 and 2017. A financial professional can be a good resource to help you determine whether you need a life insurance policy and what it should account for. They'll also be able to help you review a variety of policy options and determine which will best meet your needs. To choose the right life insurance company, first consider why you are buying life insurance, what sorts of policies and riders.